Guys, how are you? Yes, it's the Market Sniper. Let's talk to you. Welcome. We're going to be discussing platinum today. We're going to be discussing commodities generally as well. There's going to be a touch on that. We're also going to have a look at rates and bonds and what that generally means. Dollar had a little bump to the upside. Those in Bitcoin would have felt it after Bitcoin ran the 50K. Those in silver would have seen a spiller, a bit of a thriller. Half of the way from Manila, not the full hog, but quite a deep dip dive. So that's what we're going to be discussing. We're going to be making the case for inflationary times, and we're going to do it on a day that the dollar's just rallied and showed some strength. But we're going to say why we feel that there's still potentially more weakness to come from the dollar, and on top of that, why certain commodity currencies might do relatively well against the dollar as well. But the big case we're going to make to you is we're going to make a case now for platinum. So we've called the gold reassert bull. We said it would run before silver. We said it's important. The God market speaks first. Then we said the silver is turning. We said the gold-silver ratio would turn. All those YouTubes are here in this library. We don't delete YouTubes unless there are errors in recording. They're all there, good, bad, and ugly calls, by the way. So you can see the ones we get wrong as well, which there'll be plenty of. And on top of all of this commodity talk, we're going to remind you about silver while it is selling off. Lots of chatter been about silver a little bit on the world. How much stocks is there really around? Lots of rumor milling a little bit going on. It was interesting as the US session was due to start that whole thing just started to absolutely fall out of bed after making a new high. Boom, big straight down. So we'll take a quick glance at it. But why platinum? Why are we going to talk about platinum? Well, gold has run. Silver started to get going. We called the change in the gold-silver ratio up at 113 for those that were watching this channel. By the way, those watching the channel right now, there's 116 of you watching. We're glad to have you all. We really need you to do something. We don't do adverts on the channel. Therefore, we are no good for YouTube. They do not make money off of us, because they don't sell advertising space to anybody on our channel. So lots of people like and watch. If you hit the like, you push us up, because we are not selling space. Why don't we sell space? Because you kind of have to watch everything you say and be all corporate and all of that. And we think that sucks, and we don't need their money. But we do want the eyeballs. We do want the attention. So we need your help to keep it ad-free. So hit the likes. It's greatly appreciated for you. Even it doesn't mean you're agreeing with everything I'm saying. It just says you're appreciating getting an opinion brought to you totally free, watched on YouTube. Also hit one share if you can on your favorite media. Sniper Now Live. Boom. On your Facebook group, on your personal Facebook, through your Twitter, any of your other social medias. We really value that, and we keep it ad-free for that reason. Good. So a couple of questions and comments while we were waiting. We just wanted to get through 100, so you got your guys' shares helped us get there, and we appreciate it. We're going to get into the charts, and we're going to start having a look. But I want to make a general comment first. The devaluation of the dollar, which is going on with the stimmy checks and everything that is going in these end of times fiat currency debt balloon. Because no matter what they tell you, they'll tell you gold's a bubble, silver's a bubble, the CNBCs of this world, the CNNs, they'll be bubble calling everywhere except in the one place they have to, and that is the debt bond debt market. That is how much money is being created, how much has been borrowed, and the reason why we don't have real structural rates. All started with that oily little horrible man, dwarf man Greenspan, who basically proliferated, created liquidity. Even though he didn't create the most, he set us on a parabola that only could see future chairmen do more. So much so that I think the last, 146 trillion has only created around 40 odd trillion of growth, of debt created. So debt can be good if you create more growth than the debt, and it to some degree can be paid off, and certainly the payment made at a normal cost of saving, price of money rate. We have pushed that rate so low, expanded the debt so long and so far that we can never have real monetary policy again. On the basis of that understanding, we are now at the sharp end of where things start to show up even for the man in the street. We've called a reset before they used the word reset. It's been in our branding, this side, since I don't know how many years ago, and this is what they're going to intend to do. So debt is probably going to be written off at some stage as part of a deal for getting your vaccine complying to your new lockdown imprisonment structures that will be laid upon you, and that is going to be probably the deal. How do you profit now so that you can be wealthy, so that you can pay your way out of being a low-ranking serf in a slave system? Well, you've got to exploit it, and that's why the phrase "the big long." You know about the film The Big Short. I'm here to tell you about the big long. Isn't it interesting? You like a little bit of donkey schlong? You want some long? Here's the place for it. No little pippies around here, my friends. This is the big long. It's going to happen. And what does that mean? Well, essentially, it's more about everything having to revalue up in a devaluing currency. So in actual fact, it's not that. For example, let's take a look at the charts as we pivot to the charts. It's not that all of a sudden we're having much higher than normal demand for crude oil. Look at that chart. You got your negative values in there. It's almost insane. It's not that we're having, in fact, we're probably past peak crude, but the price is up, up, up. Yes, the supply came down. Let's have a look at something else. What about this? Soybean oil futures. Soybean oil futures, a totally different kind of oil. What's that done? Well, round about the scamdemic lows, you could have had 24.74. Now you're paying 46.73. You're talking about 100% in something that is nowadays genetically modified, made faster with bigger farms, with less people, super efficient equipment, all kinds of economies of scale. That's gone up double in price. Double in price, I repeat, from the lows of less than a year ago, 10 months, 11 months maybe at a push. So that's soybean oil. Well, let's have a look at something else. What about, we'll come back to that one. That's not the one I want. And we'll be coming back to that one. That's also not the one I want. Let's have a look at coffee. Coffee also looked to set to go up higher. Look at that squeezing over there. That's KC. Robusta also. I think that was the one. Corn. That's the chart I'm looking for. Corn. What about corn? You could have had corn in May of 2020, April. That is 10 months ago at 300 does fall. And now it's 545 does fall. You're looking at quite a large climb. So many of you would be understanding if I say to you, we are currently facing a commodities real bull. It's crept up because you know why? It's crept up on you because the people at CNN and the mainstream media, the British broadcasting company, rife with nasty little oily pedophiles and the rest, teaching you to wear your mask and telling you to be a good slave while they perpetuate misery. Those voices don't want you to know. They don't want you to know that the inputs in your supply chain have just all about done 65, 75, 80% in 10 months up. 10 months up. And oil, my goodness, it's exceptional because obviously it was properly killed and it bounced. But even if we take Brent, that didn't go as low. It didn't go as low during that period because it didn't have the Western Texas Intermediate storage issues. It traded as low as $16, now at $62.94. And I have shown you this one, and I will show it to you again. This is seizing the pen and the favorite color that, in fact, we will go with Little Boy Pippi Blue because this is the big schlong. And it's kind of funny that we'll go with the line. Let me just get a bit more real estate on the screen here for you while we do, once again, a deep dive with oil. And once I've set the scene in terms of commodities, I'm then going to take you into the core thrust behind this presentation, which is metals, and very specifically the platinum metal and how it's been moving. So that is your falling wedge on Brent, and that's kind of how it's looking. I can go up actually and maybe make it 2 weeker. I've kind of just done a rough sketch. I wasn't super accurate, but you guys have seen this falling wedge. In fact, it's a structure you're going to see more of when I pivot to platinum and some of the other comparisons I'll be making. In short, What we've had is three impulses. Three impulses of great recessions. Three is a magic number for these Masonic pedophiles. And as a result, it'll keep showing up. And here you have your three great crises. You have the 2007-8 crisis in oil. I'm talking in oil now. If you're Mr. Oil, your life over the last couple of decades has been dictated by these macro events. You also had the 2014 absolute thriller spiller into the China low, where the super hyper indebted China then was a busted flush, and we had the Shanghai Accord, although they deny anything to do with that. We also had what we called the first inverted HVF in a new trend that was an absolute throwdown. It doesn't even qualify for a spiller from Manila. It's a spiller from Mars. It's about as real as Elon Musk's car in space is fake. It was an absolute asteroid from a separate galaxy. It was such a spill. And by the way, you could have been part of that. You could have taken that trade. And if you'd come on more recently, you'll know us also for this sell where we actually said singles. So we have mentioned this, and oil is a very interesting commodity. The entire energy market is also up. So people that follow the likes of Lynn Alden, definitely give her a follow on Twitter and her site, and a number of other people, good analysts as well out there, have highlighted uranium. So Bill Gates, Mr. Gates, was talking about how you're going to all be eating artificial meat because it means less farting cows, creating methane and destroying the ozone layer, etc., etc. And one of the things he said is he was talking about nuclear power coming in to fill the gap that solar and wind is yet to cover in this interim period. You see, they sell you green, solar and wind is the solution, but what they have a problem with is it's not super efficient enough, particularly wind. It was quite ironic seeing iced up windmills having helicopters fly over them, spraying chemicals on them to try defrost the ice so that they could turn, and seeing all these huge turbines being dropped into landfills once they were no longer usable, and all that. The little bit more that has to be said about green being so green. But anyway, all those elements, we're good with that. I'm good with solar and wind power, but they're not ready yet. And nuclear is the cleanest. Yes, you heard it right, cleanest. What about the toxic waste? Yep, it's still the cleanest. There's no coal, there's no anything. So that's going to push up uranium prices. Uranium was a big, interesting market, and we'll be showing you that. So what you're actually getting is a groundswell of energies. But you see, the problem with all of this is that everybody thinks there's different fundamental reasons for each one of these core commodities. What has soybean oil actually got to do with uranium? Very, very little. What has Robusta coffee bean actually got to do with Brent oil? Also, not very much. And the key thing that is being hidden in all of this is the devaluation of the global currency, that is the USD dollar. That is the global. In fact, in terms of total demand, we're probably eating a little bit less. We're certainly driving a lot less, and we're certainly traveling a whole bunch less. We're more at home. We might be consuming a bit more electricity for that fact, but what we consume in electricity, we're not spending in our cars, on motorbikes and everything else. So actually, peak demand is probably in for oil for the normal elements. But it's a very, very utilized area, and it is also highly inflationary. So seeing the oil go up is going to actually be a self-fulfilling, self-feeding escalation on inflation. And that means more and more things need to go up in price because of the delivery costs more, oil's in packaging, it's in the consumption, and of course it's in everything you buy. Just to bring it to you. Until everything is drone delivered by a battery, you're going to be paying oil. So it is the universal global tax that the Rockefeller controlled. They recognized it early, and they also got it priced in dollar so that they could reserve the petrodollar privilege, which they've been exerting over the world, that Putin and China are all resisting. So Putin now deals in his oil outside of dollars, in euros and other currencies. And it's quite easily to be understood. So there is, without doubt, Carney said, it's time for us to think about that world when he was meeting with Jay Powell, like the two great minds of finance, thinking the unthinkable together. And wise old man Carney of Canada and Britain sitting there and saying, you know, Jay, the sunset is coming for your currency. It's time to embrace your twilight years. You know, like these great pearls of wisdom. Even YouTubers like me were saying that 5-10 years ago, and smarter people than all of us were saying it 25 years ago, right down to Donnie Gordon of Liberty Life in 1986, when I was still in the army and listening and learning about economics, saying the dollar is a bankrupt currency. So that is in essence where we've gone and the way that we're going, and oil is part of that. And you're going to see this falling wedge, and essentially it's three crises. You have the subprime crisis over here, and we take the pen and we go to our TG Pink and we say subprime, and then you had the whole China crisis, which was the attempt to shore up the aftermath of subprime. That eventually saw China be the consumer of last resort. Everything was China was going to rule the world. China was the biggest, until they did their own debt bomb of their own. They kept Australia up in their property market for an extended period, so they never really had much of a 2008 dip. Then we rallied, and here is your fake pandemic that goes by the name CV19 crisis that saw you coming down literally in to the 10s, 12s, $13 for oil. So this is your three impulses, your three impulse falling wedge. And what are we getting? We're crossing the other side. We may have a little bit of a pullback, we squeeze, and then we will break. And hence why I will say on these oils, you will see $100, certainly on Brent, in my opinion, and quite possibly also beyond on WTI, which trades a little bit cheaper because it's a heavier fuel and takes more refining. So that's the oil. That's the backdrop. It's actually a currency depreciation game. But what's happened is we've been watching the USD JPY, but the yen has been doing some weakening too, so that it doesn't get too strong against the dollar. So the manipulators, the global currency manipulators, are all doing a bit of destruction so they don't show up the dollar too much. But now it's showing up in everything that gets grown, bought, consumed, heating, energy, etc. Now we're going to start to move to those interest rates and debt, and then we're going to take you into the precious metals group and why platinum might be the next major mover in this game. So without further ado, let me shut that down and pull up our list of other interesting charts that we've got to show you. So let's go to that interest rate environment. That was our corn futures. That was our soybeans. Where's interest rates? ZW1. That was wheat. ZN. So 10-year T-notes. Now, this is the value of the bond. This is the value. I'm going to give you a big time period. We'll go monthly. It's maybe too much. We can squeeze the 2-week chart on here. Now, little do you know, but actually well beyond 2001, right back to the 80s, we've been in a non-stop 40-year bull market for bonds and debt. So every time Greenspan, the little oily economic criminal that should be in The Hague for all he's perpetuated against the stability of capitalism and the onrush of the new, wow, let's try communism as this new innovated idea, thanks to the guy who broke capitalism and started us down a liquidity experiment that the others were forced to perpetuate. You essentially have a non-stop bull market. You could keep issuing debt, and people every time, particularly when there was a panic and a fear, don't forget 2020, here we are, let's highlight him. In the very first quarter coming on up, look at this massive surge in bond values because of your fake pandemic. So your pandemic occurs, everyone, fear, fear, fear. Sell your Bitcoin down to $3,000. Sell your gold and silver. Sell everything. Must chase government debt where you're being paid a negligible interest rate for money that's absolutely losing value. And I repeat this statistic, and I must say it every single video, but it's so impactful. 24% of all dollars in circulation were issued last year in 2020. Plus, You've just pushed through 1.9 trillion into the global markets, which is essentially into the American market, but it dissipates everywhere, courtesy of Biden, sniffer Biden and his associates. And what does that mean? It just means more supply. How many more dollars during 21 as a percentage of total? So think of that. Ever since existence, every dollar issued, which will include electronic, which will include physical cash, it will include safety deposits, it will include banks' money on hold, reserves at the central bank. Every single digit in a computer that represents a unit of currency, you gave these guys the power. Speak to Mr. Griffin on the creature from Jekyll Island. You gave them the power and they've been creating it like confetti ever since. They've put you on in a deflationary environment on your currency. Well, they've been inflating the currency and that deflates your buying power. So you were put on a greased pole, and every time you stop running on your treadmill, your money is going down in buying power. That's what you let them do. They can proliferate and government can spend it on their pet projects like the Kennedy Association. The criminal like Pelosi can continue to chase stock like Tesla, which is on a permanent boom because they're giving away contracts for all government vehicles to be battery operated. And he just so happens to be the guy with all the credits that were paid to him by the Californian state and all these other government subsidies that's scaled up enough to be able to deliver on that. All these other internal basic frauds at your expense, and you're an outsider. And you need to understand you're an outsider. You need to understand they'll never let you have your own money. So anyway, after that little preachy parable, this is the debt market. Now, we said a while ago, and this is the debt market on a fortnightly basis, that we wonder if this isn't a top. Now, top calling is a dangerous game. You'll invariably be wrong. I'm sure there'll be plenty of you to show up to say, yeah, you see, you were wrong. We could get another deflationary spill and we could get another spike like COVID. After all, Klaus has forewarned us of the Russians that are going to hack all our banking accounts, or maybe blockchain and empty all our crypto wallets, or maybe because you save your password in a Google browser, you suddenly find everything's empty one morning and you don't have any money. But guess what? They'll write off all your debts and you can be a UBI serf, providing you take your vaccine and wear a face nappy and do everything else they tell you. That's kind of what might happen. That could be deemed pretty deflationary if COVID was deflationary. So you've got to watch out for that. But what we said is, could this be a top? Could this be a top that would be in formation? A lot of people were real excited and saying you should be going long the bonds when this squeezy was occurring, but we didn't like the structure. You can learn more about why you don't want it, why you would be suspicious of the structure and see it as a possible reversal instead of continuation. All you have to do, book a call below. Book a call and learn why that was potentially dangerous. And some will say, but that's your high. Could have been like that. Why would you not go long? Why would you not go long? And in actual fact, you'll learn quite a bit about proportionality, structure, and various other elements, and you'll become independent in trading and be with a group of like-minded people, all building wealth in a reset time. The links are below, and my assistants will be sharing them through the chat right now as we are speaking. Click and have a chat. Find out what it's all about. By the way, less than 0.2 of a Bitcoin. If you can't make that in a year with us, then we've let you down for our top product. Okay, so let's have a look at that. So this is heading down. This could be a peak, and it's just had a couple of stabs. It's accelerating down. Grind line, spill, grind line, spill. Initially coming back, it seemed like staged tactical retreat, getting more and more disorderly as we head down. What is this happening? Well, your 10-year debt instrument, one of the most common and proliferated debt instruments, is now at a point where it may have put in a top. Now, could we be wrong? Of course we could. As I've said, top calling is dangerous. But this is looking deeply weak. That means people who are holding this are losing money. Its valuation is going down. If you'd bought it during the Corona fun and games and you bought the peak, you could have been in and around 140. People who trade bonds, they're very dull, boring, and slow relative to cryptos, I have to tell you, usually have a high amount of leverage. So it's now from 140 now down to 136 and looking weaker still. So what happens is Interest rates are going up relatively when bond values go down. They have an inverse proportionality. To attract new people into buying the slipping in value debt, they have to pay a higher coupon rate to make it more attractive. So any new debt that gets issued has to take into account that the current interest rate environment needs to be more sexy, pay a better yield. What does this say? Well, Shadow Stats, who we're a big fan of, who I'm a subscriber to, and you can check out John Williams over here. He says currently, and I can quote him direct, using the 1980 base of CPI over here, all these things are done. The alternate CPI, which is actually the legitimate CPI, not the fake number that they're manipulating, ever changing the basis for comparison and every other statistical skullduggery that they perpetuate against you to continue to tell you how low inflation is, thereby how justified they can be to continue to print more money because there's no sign of inflation and they've got more runway, and they keep promising you that you'll be taking off one day on your recovery, but there's plenty of runway. Meanwhile, you're about to plow through the trees. The real truth is 9.1% year to year, up from 9 in December. 8.8% in November. So you have an upside trend. You're at 9.1, and the next major number is a double-digit number. Once you start getting in double digits inflation, you don't have to go too far into it where people discuss that and describe that as a hyperinflationary environment. So from double digits into triple digits, which of course is Zimbabweification, is a hyperinflation. But the growth isn't there. So it's a stagflationary environment. And that is the situation where we are right now. Those are not my numbers. Those are other people who I think have taken a better approach to putting an idea. And remember, your inflation is different still. The poor man's inflation rate, the middle man's inflation rate, and the wealthy's inflation rate are very, very different. So let's take a look at that dollar index. This is what the dollar's done. So you buy a dollar-based treasury to get paid back in dollars at some time. You pay when the dollar is up here, and you buy your treasury, which you paid 140 for, if you remember, with a dollar value of that. In the meantime, the dollar falls from 180 to 90. You've lost 10%. You've actually lost a little bit more than 10%, but let's just say 10%. And at the same time, your 140 and your bonds has actually fallen also to 136. So the number of value you'll get back if you have to close that trade is lower. And in the meantime, your currency that you're trading in has lost value. Any reason why you might want Bitcoin, gold, silver, and other metals or hedges that cannot be stolen from you in an inflated way? Well, good luck printing gold, silver. And if the Bitcoin algorithm stays as it is at 21 million fixed, good luck creating more Bitcoin. So this is where we are. Now, we had a little bit of a bzzzt, today on dollar, but it doesn't change our view on where I'm ending and taking you up to, because I'm taking you to platinum, but you've got to be patient because we will get there. So that was your little spike. Now I have to say it's even for a spike on the dollar terms, it's ended pretty soon. That's quite an engulfing and a little bit of a what I just call almost like ripple, a pump and then very quickly a likely fizzle. We did note and draw this possible, and we don't have much faith in it. We draw them because they exist, but we don't have great faith. We'll say, let's see if you do your reversal. That was your inverted head and shoulders. Left shoulder, head, right shoulder. And you did. You broke, you started to make some progress, and then you slumped. Boom. And then you created a broadening structure. So I shared this in premium and said dollar looks like it's going to be weak. Good for Bitcoin, good for gold. This was a couple of days ago, and Bitcoin has gone up. It's actually run 50K. Silver had gone up and continued to work its way up. I need to check on gold. Gold's kind of been a little bit heavy in truth. Now we've just had the spike. That brought on the silver down, and that stopped Bitcoin from holding itself above 50K for now, for the moment. This probably is not very, very far away from invalidating. I will give you that level. And I expect lots of reversals. This won't be the first reversal that invalidates. So you don't have too far to go to fizzle back. And you're saying, but it was so strong. Well, that was kind of strong until it wasn't and went lower. All of this was kind of strong until it went down, as was that. But you just can't hold on to any of it. And there's reasons. Because if the dollar starts becoming too strong, start worrying about your rand, your lira, and some of the other emerging market nations and their debt situation, which are primed to fail. They aren't ready to pull the whole tent down on you yet. Remember that. They've got to get everyone vaxxed and with nappies on their face. And people aren't cooperating, some of them. Okay, good. Let's have a look at some of those comments, because we're going to go to the metals now and we're going to start hitting on the crux of the matter, why platinum could be of especial interest for you in your trading in the traditional markets. So let's see. BTC is strong now, says Human Healer. Yes, I must have a check. Well, you can see this is a shooting star now and is likely to fizzle back. So the dollar coming back off is going to lead to strength coming back in to Bitcoin. Let's have a look at it. I'll do a quick run past it because it is an anti-dollar. It is an anti-dollar. So there we go. We're interested in all anti-dollars. We'll do a full crypto live stream for you tomorrow, and we're expecting we'll have more to share with you. I have to check that. We still got a bit of a shooting star there, as you can see, as we ran the 50K and then back down. But it's holding this level. It's not going away. It's going to keep leaning up. So there's a number of ways you take the 50K. Like I say, I'll do this in more detail next time. But first you reach for the 50K. You're reaching for the 50K but not quite getting it. Then you touch. Then you break and pull back. And then you oscillate around. Then you break above and you support. And then you run. That's it. So there's many stages to that. We'll do more on that when we do crypto tomorrow with you, by the way. So don't forget to hit the Crypto Sniper channel. If you haven't hit always, because we don't do adverts, you will not hear from us. And they are unsubscribing the always. You have to keep resetting it. I'm afraid they do that. I don't know why. It seems pretty churlish to me, but they really want to put advertiser material in front of you. Okay, so let's go back to our palladium and our platinum. And there's an interesting story, because I mentioned palladium there, and you think, hold on, he was talking about platinum. Well, palladium is part of the platinum group as well. So let's show you what happens on a very thinly provided metal. Some of you may remember this chart. We did a few live streams off of it some time ago. Let's put it on the weekly. And give you some history as well. I'm just going to take the eye off it so there's no confusing draws. In short, you could have bought palladium around here at $159 in 09. The bottom of 09, $150 got you an ounce of palladium. That was significantly less, by the way, than platinum. In other words, they are part of the platinum group of metals, palladium, rhodium, and platinum itself. So the platinum group is the larger set and includes platinum as a subset as well. And then you also have palladium, rhodium as other subsets. At its highest point, we're at 2,700 from around $159 in 09. Now, that's kind of like Tesla growth. Admittedly, you're talking about 12 years. Tesla's done it in 1 year. So it took a while, and there was some down legs in the process. But this is what's happened. So basically, people could have been... there's not even a full exchange. There's no exchange for palladium. It's a lot done between direct buyers. It's almost like an entirely over-the-counter market. And suddenly, people had to reverse out of diesels, which was using more platinum. So it suppressed platinum's performance, and everyone had to switch because of the hybrids, and palladium was preferable. So there's a slight difference in properties, and of course palladium was cheaper at the time, and a little bit better for that catalytic converter requirement. So that saw palladium absolutely shoot, as it has done. And what it also did is, when silver and gold started to move, particularly gold was the first one from its, it traded at 1,080 low. It eventually had its structure that we covered with you, plus the upside HVF on against the euro and the pound. That big move, which saw silver start some form of a move, although silver hasn't made it a new high, palladium actually languished. So let's do a little bit of charting. Not palladium, my apologies. Platinum languished. So palladium was the shooting star. It really hyper-performed. Platinum underperformed because palladium was eating its dinner. Its industrial use case was taken away to a large degree, not entirely, but to a large degree. And everyone had to right size for the palladium market and no longer needed the same level of supplies. So this here is the platinum market. And as you can see, if we go back to 2009, when palladium was $150 odd dollars, platinum was costing you 1,020, and at the 2008 highs was already well through 2,000. Platinum is typically traded at a premium to gold. Let's be clear. Gold is found at few places. China and Australia are big providers of gold, apart from Russia, Canada, South Africa, originally the biggest, now quite low down. Central Africa, a couple of places, the US. Platinum group of metals are not found very often in very many places at all. You're looking at Russia and South Africa. Boom. This is a very thin market. This is a very, very thin market. Let's have a little look now on how platinum is doing. And I want to show you again this crises, because all of these economic crises, I showed you the 3 crises that occurred in oil, they have a similar appearance in metals which have a certain degree of monetization. In other words, they have a monetary factor to them. And there's your falling wedge. There's your hyper first, super spiky first impulse on the falling wedge. Super spiky is typical on the falling wedge on the upside. Then you get a big bloated one, and usually you get some form of head and shoulder inverted HVF structure that takes you eventually to the downside, which you got. So you get a huge long grind. This is your second. Number 2. That takes a long time to get to a base, and the COVID-19 was that base. At one point you might have thought that was it, and then boom, you got run through. You got run through by this particular event. And since then you get a small 3, and we've now broken. So platinum is finally broken out of the fallen wedge. So this is a little bit ahead of oil. A little bit ahead of oil. So you might say, well, why didn't I trade oil rather? Because then I'm getting in early, I'll get the early move. Well, not so fast. Not so fast. Because if we start having a look at platinum against the rest of its peers, platinum against gold. Again, I'll go for a fortnight. Just to give you, and it's unfortunate that we're only getting so much data that we're going back to 2006. But actually, you can see here, and let's take ourselves off the log scale so that our jaws fit in. In truth, against gold, platinum is only just getting its running shoes on. It's literally just broken there. In other words, if you compare what gold's done from its 1,080 to beyond $2,000 to its high and sitting at 1,800, still around 75% up from its lows. You compare where platinum was in those times, which was in and around 17, 18. Remember, its high in 2008 was 2,200. What you've actually had is a huge period of loss of value. You actually have a falling wedge in the relationship between platinum, XPT, and gold that has spanned from 2009, never mind you had an absolute spiller in the subprime crisis, all the way through. That's only breaking now in 2021. A 12-year falling wedge. Now breaking in the relationship between platinum to gold. That means with what gold's done, don't forget platinum's a store of value. You can buy platinum bars, you can have platinum jewelry, you can do all of that. You can color it different colors with copper and various things. You can have it high purity. You can do many of the things that you do with gold. It's more rare. It's far more rare than both gold and silver. And it is truly unique in terms of its properties. So this is just the beginning. This is just the beginning of a potential re-rating. As a small reminder, up top here, 2.4 the value. You needed 2.4 gold ounces for every 1 platinum ounce. And it still doesn't account for the rarity. The rarity of platinum ounces to gold ounces is significantly higher. Significantly higher. For every gold ounce you get, I don't know how many gold ounces you'll find for every 1 ounce of platinum that you find. But it is vast. It is huge. It is Googleable, and I should have maybe done that in preparation of the video. So sorry I don't have that fact to hand. Maybe I'll tweet it out later. So this is a huge loss of value on platinum relative to gold. It's below 1. It's below 1, and it's significantly more rare, and it's totally unique. Okay, so that's one chart. Maybe gold's just currently a bit overvalued. Well, let's have a look at one of the other comparables. This is platinum versus palladium. Same draw. So this is two within the same family of platinum group. Platinum itself against palladium. Platinum itself against palladium, guys. I'm watching your comments. I'm keeping an eye on it. Platinum to gold in ground. Yes, give me the ratio. 10 to 1, says somebody. I'm not sure if that's correct. It's a comment in the chat. I will have to check it, but maybe he's Googled it and it could be right. So, remember, two not so stable countries are the sole providers of all platinum and rhodium and palladium metals. So this falling wedge against palladium has been in place since beyond 2006, some point beyond there. At one point, 5.5 palladium ounces were required to secure you 1 platinum ounce. 5.5 palladium. If you came with 5.5 palladium, I'll let you have 1 of my platinum. Where's that number today? Just through 0.5. Just through 0.5. You're talking about beyond 2006, some point before, my data did not extend, to the point that it just broke out here. You can even see the volatility burst with it, roundabout just after your pandemic kicked off. And you've only just started to go up. You really, really need a magnifying glass to have a proper look in there to see what it's done since. You're very, very close to the all-time lows. So what should happen in terms of platinum? It should have some degree of rebound against both palladium and gold. What would happen if platinum went to 2.5 or 3 of palladium? Do you think palladium is going to be going down much in this environment, this fiat environment? It could go 2.5 times. Well, actually, it's on half, just through half. So to go to 2.5 or 3, it's going to go 6 times against palladium, which could probably still go up 20% without having to shoot the lights out. So that makes it a very, very interesting choice. No blockchain comments today, please, Josh. I don't know what Riot is as well. We'll talk about equities and platinum and metals. So, yes, rounded bottom coming for XPT. Well, it is quite rounded. It's also come out of its wedge and it's starting to go up. So we can expand that a little bit because that admittedly is a big time frame. It's a 2-weeker. Let's give you the daily or the 4-hourly. Seems 4-hourly wants to come. You could look for upside structures of a bullish nature against platinum and palladium. It might give you some nice trades against the dollar, the ever weak dollar. So I think that's your all-time low. At this point, you actually needed, instead of getting 5.5 palladium for your 1 platinum, you actually only needed 0.35 palladium of an ounce. 35% of an ounce got you a full platinum ounce. They still make Rolexes in platinum as well as gold, and it's deemed more rare and more aspirational. It was the god. It was the wealthiest of all the special metals. And it's fallen out of love because of industrial demand. Hey, just think. Yes, me too. Likely to fall if BTC falls, someone is saying. Josh Matthews, you've missed the Riot blockchain pump since last year. I'm sure I have missed many things pump. I'm quite happy to be in some of them. The notion of being in everything that's going to go up in this environment is a fool's errand. By the way, on that point, does that mean you should sell all your cryptos and chase into platinum? No, no, no. We want to be in the fastest horse, and I still think that Bitcoin and crypto generally, with the core projects like your DOT, your ETH, your ADA, and maybe a bit of DeFi spec, your 5x5 that I've discussed on crypto, should be a core holding. I also think you should get physical some metals, silver ideally for you, but you could also buy some platinum. You'll get less weight and more value crammed in a smaller place, so less to carry around. I prefer it almost to gold, because gold is held by the central banks and the bullion vaults. They can hypothecate till kingdom come. That's why silver is the market they manipulate. They don't have to worry about gold too much. I think they have to let it go up a little bit, etc. And that does float their own balance sheet slightly. And it does obviously show the failing of the dollar. Remember, until they're ready to pull the tent down on all of us in their great reset shenanigans and the next crisis that will do so, that they're planning for us all, they will continue to protect the dollar and the great lie of their central banking debt-based cartel. They will continue on the surface to protect the great lie. Eventually, all the conspiracy theorists will be proven right. They'll deny, 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 and deny, and then they'll suddenly pivot to saying, well, obviously that was unsustainable. And now that's happened, and here's your new scheme. So we're done cooking you there. You're the last to hear. You're left carrying the bag, and now we're telling you how we're cooking you again for a new cycle of deception. And you've got to decide how you want to report. You want to live their fake surface lie, or do you want to see below the surface? And having silver, having platinum is definitely going to shore you up a great deal. Gold, I think they own too much of it themselves. What metal is your Rolex in? It's in all the best metals. It's in transgender pink, rose gold. Just picked up another 10 ounces of platinum to add to the stack. Good man, Lanko. Thanks for the miners call. So actually there are mines. So before we lose too much momentum here, we've got to talk to you about some mines. So some of you might like shares. So what do you have? Northam Platinum. You're going to get a lot of Southern African shares. Some of them have holdings even in Zimbabwe. Some of them have one or two places outside South Africa. That's also in Africa, but generally you'll be looking at mainly the South African ones. You can also look at Russian platinum equities if you want. Impala is another one. Let's have a look at the 2-week chart. The interesting thing about Northam is it's been absolutely pumping well ahead of the metal. Don't know. It's a bit of an exception. Look at that. Squeezy, squeezy. You could have got in at 49.72. That would have been the Johannesburg Stock Exchange. So that's rands, by the way. So if you're in dollars, you need to basically divide by 15. But if you're in pounds, you're around 17.5, going on 20 almost. So, you know, it's about 25 pounds, about $30. That's 4,972 Rand. And now, of course, you're on 211, 21,109 from 4,000. So that's a 5x, however way you want to spill it on that. And it's running ahead of platinum, with the platinum price only just starting to get going. Still well below gold. We'll show you one or two others, though, that aren't so advanced. Impala Platinum is one. Note the falling wedge. That is symbolic of the platinum price and the great breakouts. Oil, falling wedge. Platinum, falling wedge that's just broken. So many macro falling wedges, structures, which have the 3 crises in them. Even softs have the 3 crises in them. They all lost value. Foodstuffs lost value in the 2007-8. Look at it, into the 2009 lows. Then the whole fake reflation all the way into 2016, the China Accord. Then weak, and then further softness into the 2020 corona spike, but you were already coming out. So this equity was moving before, and it come out of the falling wedge. Sorry, it had broken up out of the falling wedge in and around, let's be accurate here, 1819. Nice run up. Corona gave you the bargain discount buying, but you're still in. Now, this is the over-the-counter market. I'm not sure if that's going to be rands or because Impala is it, but it might be an ADR, 15.99. In these inflationary times, it would expect it to run past that. In other words, you will make higher highs than you did in the giddiest proliferation. Not on account of it being a brilliantly managed company. I think it's adequately managed to pull metal out the ground. Not on account of tons of usage for platinum, on account a large part of the devaluation of dollar, the increase therefore in a dollar-based platinum price. Then you have the rand hedge, which is super weak with rand costs. Once the dollar interest rate starts going up, the rand and those other things are going to fall down. That means all your input costs are in a peanut currency, including the labor, the mining, etc. You pay income, you earn it in dollars, and the dollar price is going up. There's a lot to like about the profitability dynamics for a platinum company with South African rands as input costs and dollar currency. It's a rand hedge. It will make higher rand profits by a huge margin, particularly when the emerging currencies, and yes, their weakness will come back. May not be ready yet, but it will come back. We don't know when, but it will come because they are poison. I go there and I go there regularly. You never used to get a 200 Rand note. Now just to do anything, you only get 200 Rand notes coming out of the machine, and you carry a big bundle of them. You want 5 grand, it sounds like a lot of money. It isn't. 5,000 rands, you're talking divided by 20, that's how many pounds it is. You're talking about 250, 300 pounds. Most people draw 300 pounds when they're drawing their maximum in the UK. So you're sitting with quite a lot of 200s. 5 for 1,000, 25 big 200 Rand notes. Leopards, the most valuable animal, they're all over the place. Leopards are meant to be scarce. Now they're commonplace. That tells me the printer is a-running. The printer is a-running, friends. There's skullduggery in the mix. Those notes won't buy you what they used to buy you. The 200 is the new 20 Rand note. That's it. Will the SA government nationalize, he says? No, because they are under the control of the international cartel. They've gone full COVID-19 scamdemic and taking the Bill Gates money, the WHO money, and all the bailout money and all the everything. They're totally in on the game. Platinum is required, so we have a quasi-capitalist system with an underlying oligarchical communist system. It's called a mixed economy. It's more communistic than you realize, but the things that still have to be pulled out the ground, still have to be paid, still have to happen for the construction and all the colliders and space missions and all the things that these guys have that they might need the metal for. And cars, hybrid cars for the elite to drive around in their Tesla Plaids with their 1,000 horsepower battery rockets. They're going to need the platinum and the palladium to do it with. So there's got to be men scratching around in the ground to bring it up for them. So communism, the communism will be about your income and the tax and a great leveling. That's where the communism comes in. Crush small business, have a huge burgoyes that gets forced down into a working poor class that gobbles up UBI and takes their vaccines like a good slave and anything else thrown at it. Okay, how much you got physical? Now I'm going to start discussing how much physical I've got with you. I think not, but I stack, and I don't stack in an obvious way, but I have control over it, and I think you should do. Let's be clear. I'm expecting it to become illegal. It's going to probably get that bad that it's going to become illegal to own physical platinum, physical silver, and possibly even physical gold. Apart from jewelry. I'm expecting them because you'll be punishing them for their bad dollar behavior, and they are getting ever more overreach, ever more aggressive, and ever more hostile in terms of how they speak to the citizenry, telling you how to do, having 15 cops around a guy having a snack outside and all asking him why he's not, why he hasn't gone home and why he's in locking down and all of this. The idiot police, a lot of them, there's some good cops out there, have become weapons of state. The system is being turned on you. The guns of government and the system involving all the resources you've paid for with your tax money to serve and protect you are now, in the name of protection, stripping you of every freedom you ever had. That's what's happening. In a sentence, if you want to understand that. That's where you're going. So if you do smart things that end up protecting you when you're not supposed to be protected, you're supposed to be hollowed out and become an impoverished slave, you're then doing something illegal according to your government. You're hiding. You've got something to hide. Therefore, you're a tax evader, you're a white nationalist, you're a misogynist, you're everything else. And you're a brown nationalist, maybe. Maybe you're, but you're not good because you must be a hollowed out slave because that's what we want. And anybody who does smart stuff that exposes our scam is criminal. That's it. Whether you're a man, woman, black or brown. And that's their game. So that is Impala Platinum. Looking pretty good. For those that like, and we're mentioning rounded bottoms, you've got a plenty nice bum cheek in there. So you can dine out on that one. Of course, you had your little COVID zit, which is a complete buying opportunity for insider elites. That's all part of the masonry cult that know currently we're going to do this slam down, go grab all your Tesla, Bitcoin, etc. at $3,000 and all the other bargain basements we're going to lay on. Little discount sale for you when we flush out the over leveraged hands. But that little point aside, that is very, very rounded and you're breaking up. And that was your return move. In essence to that. So that's Impala Platinum. So you've got two equities there. By the way, in case you just thought it was, I just showed you softs, soybeans and everything else. Let's just remind you of copper, an industrial metal. How's that done? Again, here was that's quite a big time frame. Let's do daily. Here's how copper's done since your scam was perpetuated against you. 340, now trading 644. Every single one of these is virtually 80% up. Well, that tells me the currency is halved. Actually, they may have done 24% last year, but possibly they're hiding something. There's some stuff gone into slush and skunk funds. Plus, there's already what's been done this year. And there's a little bit that was the back end of last year. You've probably, in the last 10 months, it seems everything has gone up 80%. That means to stand still and still be economically viable, your buying power got nearly halved. Nearly halved. They've taken 45% out of it. You've got, if you started with $100 buying power last year or $1 million, you're sitting with 550,000 today. That means if you haven't nearly doubled your money, you've actually gone backwards. Because how many times do we need to see 80%? On soybeans, copper, I mean, what have they got to do with each other? One's a plant. One gets pulled out of the ground. Why have they gone up the exact same amount? Isn't that suspicious? Everything, 340 to 644, they're all around there. They're all around there. Let's have a look at uranium, for which there was an overhang. How's uranium done? Boy, oh boy. This one's done more. My TG pink line brings you in at 0.4. 2.45. 0.4. 2.5. I mean, if it's 2.6 later today or in the week, you're actually a 6. In fact, you're already a 6x. You're already a 6x at 2.4. My mathematics is leaving me down. Last thing to leave. My empty head. So you're already done a 6x on uranium. Now, this market was horribly flattened. And you'll see that I'm again showing you something going on. But that's been a squeeze. That's broken out. So uranium's up 6 times. More than 6 times. The least I'm showing you is an 80% move from the coronavirus lows. Okay, I chose the absolute low. So what if we just took some point aggregated low? You're still up. If you take one, you're still up 2.5 times. And on the other things, you're still up 40%. Even if you didn't take this, the absolute low to where we are now. What does that tell you? They're all about the same. Not this one. It's even better. But this one's had an overhang bear market for an extended period. So here you have energies. Energies, oil. Oil, $64 on Brent, traded 12. Certainly more than the 80%, isn't it? It's actually the soft commodities where there's a real economy of scale. And guess who's been buying all the farmland? Going to have farm gates, and it'll take about 14 states of America. That's where we're at, guys. That's where we're at. And platinum is a laggard, and he's catching up. He's getting his running spikes on, and it can be fine. And it's a very thin market. It will be easier to squeeze than silver. I'm a big fan of stacking silver. The cost is low. I know it's industrial use. I think you should do it. But platinum will be a thinner market and will be subject to riots in SA, strikes, union labor. There's a lot of discontent with the ever-going pilfering of Ramaphosa, who is clearly just a thief, just an organized thief that's in with the rest of the cartel of central bankers and politicians of the global WHO scam. You know, it's not going to end well. It's not going to end well. There could be labor problems in Africa, and that could be a real problem. Fuel cells, EVs that can range and pull big loads will require large amounts of platinum. Huge liquidity squeeze in the metals, says Logan Fire. I agree. I agree. Although it'll also require palladium. But you chase palladium, you're chasing platinum because you're chasing that group of metals. So they do get mined together, and same with rhodium. They do get mined together, although they have different processes involved. Kel, silver comes in many forms. Antiques are cheap and many times under spot price, depending where they're brought. Silver cutlery he's talking about, and tea sets, yes. Purity is a little bit more sketchy. Could be a lot of mixed in there. I prefer just to have highly pure, clean bullion vaulted. I don't want to get into numismatic coins and the collector and the arty-farty side of things. I want max metal of pure form. But I understand those, and there is scrap silver, the old coins, but they're mixed aluminiums, zincs, and various things in there. I like real purity, condensed, a small weight for the highly prestige premium product. Francis, CCJ on the NASDAQ, uranium stock. Yep, let's throw in a uranium stock for you as well. That's a good suggestion. Thank you for your suggestion. By the way, guys, come and join our board. Some great setups that we've been putting on that are part of the big donkey schlong long. Everybody talks about the big long. You've got to credit the sniper, and you've got to call it the donkey schlong long. Is that agreed? Because it's going to be like that. It's going to be thick and long and fat, and it's going to hurt the people that are on the wrong side of it. It's another classic. The mine is reflecting the underlying, which is unsurprising. And that is a huge, huge 2007. Thank you for the lead. It's a very nice chart, by the way. Credit to the gentleman who said to have a run past it, Josh Matthews. Well done, Josh. Lovely setup. 3 impulse falling wedge. 1, your fat bloated. 2, you had a meek 3 that bounced along there, and then you broke. Boom. That actually was a bit of squaring up in there to break up. And now you're good. And you can get it at $16.99, by the way, the 2007 highs. We're in and around 57.50, 55 range. You can have it sub 17. Sub 17, traded 50 in 2007. I think you're blowing the doors off previous highs. This is the great reset, guys. This is fiat to the toilet. This is why it's the big long. And that's why we're here. What else have you guys got for me? Francis should quit trading and become a comedian. The big donkey schlong long. Yep, we can agree. PLG BTO. Joseph. I'm not sure. What have you got there, bud? Are they palladium or platinum stocks? Let's trust him and go have a little look. Yes, I see it. Good shout, bud. Let's get some of the ouch, that is flat. There's a story behind that I don't know. Platinum group metals. We need a log scale that typically. When you get something that flat, there's probably an issue with debt. They probably got murdered on debt, but there's some sign of recovery. Beautiful inverted, by the way, that you could have traded with overperformance right there. On the bear side. Spill. Wow, overperformance. Huge, but possibly turning. But there's more to this one story than just that. That was interesting share though, thank you. PLG, and then there was a BTO. Was it BTO you had said? BTO. Doesn't look like it. There's a Gold Corp in BTO. That's the Canadian. You might have wanted me to have a look at the Gold Corp. I'm not sure if there's much of a platinum play in that. NAM, said somebody else. I was in NAM, the days back in NAM. Namibia it was. With a rifle too. I suspect New Age metals. We got the Canadians in the house. They all want to show us flattened pancakes. Flattened pancakes. This is a Canadian story. We'll be at the top of the metals market when directors of BRIEX are being thrown out of helicopters. That day hasn't come yet. And there's more exploration companies than you've ever heard of before. Like ICOs, exploration companies are popping up. Uranium Energy Corp is doing well. Yep, there's a couple of uranium energy stocks. So this is broad. This is a slight stray from the theme because we're now looking at some things that aren't platinum. But this is all part of the broad inflationary commodity trade. Uranium Energy Corp, UEC. I think I did that one actually. Yeah, I did that one. Let's do some more of the platinums ones. There's really not too many platinum shares. Having said that, there's quite a few hits there, but a lot of these are the price. There is an ETF, Aberdeen Standard ETF. Stonks, give us stonks. PLG, did I do PLG? Sprott Physical Platinum and Palladium. Now that's an interesting one because it's got both in it. So it's a little bit of a hybrid of the platinum. Northam Impala Wisdom Tree was one of the ones we looked at. That's German. Anglo, that was the other one I was thinking of that I hadn't done. The evil axis of the dark star, Anglo-American Platinum, created by the likes of Cecil John Rhodes, Harry Oppenheimer, and all the other psychopaths. Now, the interesting thing about this one is this one was running well before the turn in the platinum price. You wouldn't chase that now. You'd be a bit late, even though I suspect it'll go a lot higher. But you actually had. This was one I'd looked at and I'd meant to show you guys. But there's your falling wedge. You bled out of it and then you started to turn. You had your CV19 discount window that brought you back just last year to 4, and now you're trading 20.2. So that's a 5x. Pretty good and looking strong. So you can see where those others might end up if platinum continues its improvement. And platinum, the price, remember, let's finish on the platinum, the price. We've got, how many guys have we got in the house today? 466 watching. Great to have you all. Thank you for hitting the likes. We've got more than half on the likes. We really appreciate that. We intend to keep it an advert-free channel. But understand you will be unsubscribed. Understand you will not hear from us as often because it doesn't serve the advertisers and YouTube for monetization. So make sure you keep re-hitting the always. So once again, this is your platinum chart. I recommend some physical. You can also dip your toe in. Some miners, we resisted there. This break might look like it's been going for a while because it's a monthly, and you've probably got 3 months under the wing so far in terms of the break. Remember the relative valuation to palladium. Remember the relative valuation to gold. It is lagging. Gold, new highs from the 2008, 9 and 11 highs. That were those two highs. Gold was higher here. And we are only at 1300 for platinum. And it's traded almost before 2-3. Okay, that ends this presentation on platinum and palladium. This is the big donkey long. It is going to be long all commodities because of fiat devaluation. There will be various shortages. By the way, this pricing will lead to talk of, you're going to hear the loony left coming to the fore. Oh, it's evil capitalists trying to make money out of the poor people. We should put in price controls. Price controls and everything's going up. It's time to put on price controls. And they won't ever go, oh no, actually it's your central banker that's been killing the currency. That's not allowed, you see. That's anti-Semitic to do that. You deserve to be, oh no, you Nazi. But that's the true fact of the matter. The central banks are proliferating the currencies across the world, particularly the American central bankers, and the likes of Yellen, who's been recycled out of central banking into Treasury Department and government. I thought these were supposed to be two separate things. They're merging and splurging. It's kind of like the FDA, the Food and Drug Administration, with the pharma companies. They're merging and splurging until you realize there's one big communist class that has an agenda, and you ain't part of it. You're part of the scammers. You're the marks, they're the scammers, and they're coming to get you. Do what they most hate for you to do, because that probably will serve you best. Stack platinum, stack silver physically. Bullion Vault, links below. You can do it online and also buy direct to have physically on with you. Book a call, become part of our community. Leverage long trade this while you can, with real money management. Choose the key inflection points and moments when it's going to happen. There's probably one coming for oil as well, which is almost lagging, but I would say platinum was squashed so hard for so long. It's got a lot of catch up to do. You can be part of making money in these reset times. And as I say, that is all from me. Final comments. Ain't that the truth? Thanks, Francis. If you consider joining the link, there we go. What would you expect our owners to do to people with large property portfolios? Property. Divest from property into just your personal, big, rural living space where you've carved a chunk of real estate out, where you have at least a boundary that people can't wander in there, that at least they might need a warrant so that you have some degree of legal protection. Expect wealth taxes, expect rental controls, expect forfeiture or seizure of properties that are left empty when they claim to have homeless people outside. The leftists they'll inject people in there. They'll pay you a stipend in rental. They will piss up the wall. They'll burn the insides out and they'll leave, and the state will do a shit job of fixing up your premium apartment. These are communist Bolshevik times. The burgoys must be crushed and leveled. It's not going to be a strong position, especially if you have debt. Consider the possibility that we actually get a forced interest rate cycle of increased interest rates, and you're sitting with an Airbnb portfolio or a long-term or short-hold tenancy type agreement, 6 months and a year tenants agreements. You're going to start to have more people not paying that don't have to pay. You can't put a bad mark against them because that's mean, because they suffered because of COVID, the fake pandemic, that they're now giving them the excuse to not pay. This whole society is going to be set up to protect the shirkers and to punish those that seek freedom and independent wealth and self-sufficiency. So the shirkers will live off you like parasites. They will live rent-free. You will not be able to do much. The laws are pivoting that way. They don't want you to be free and independent. Do everything that can buy you the most freedom and independence for the longest possible. Have no banks in your life. Have no debt in your life. Own one beautiful, massive gin palace of a place where you can do all that you like. You've got a gym, you've got a pool, you've got a ice cold bath, you've got everything you need right there. You're quasi-rural, your neighbor's fairly far away, you've got plenty of real estate that you can ride your bike in, even if you were quarantined, that you may not ever leave that home ever again. And all your food would be brought to you by drone. If that became your prison, how golden gilded cage would it be? Or how awful would it be? You decide that now. Stack gold, stack silver even more, stack platinum even more, stack platinum and silver. Stay in your cryptos. It's probably still the fastest horse. And that's what you got to do. Seek freedom and privacy. Do everything that's required in that point. One day I might just have to disappear because some of these messages would be deemed highly, highly inflammatory. And another reason why we don't have adverts on this channel, and you can like us for telling you exactly what we think in true South African fashion. Thank you so much for coming on. Thank you for watching. You can be a member in our amazing community. Book a call on the link below. Au revoir. May you have a platinum shiny future. Let it be that silver lining to the COVID storm. Wish you well.